we're constantly looking at what's the best way to spend this money. What would I do if this was just my property and my property alone? Nobody else is involved in this. And we always come back to the right answer is the smart thing to do is to reinvest the capital back into the property when needed.
If you're not conscious about your investment strategy, you won't end up where you want to be, not financially or as a human. On this show, we interview highly successful investors and share how they overcame limitations to become unstoppable forces of success. If you're ready to learn what it is to be a conscious investor so you can end up where you want, keep listening.
Welcome back, Conscious Investor. I am so grateful to have you back listening once again. I hope you enjoyed the last mindset episode and that you have found someone that you could share that with to encourage, inspire, and support them. And guess what? Of course, it's an interview date. That's the day of the week. And then the next episode, as you remember, is going to be another mindset episode. It'll be me solo, just diving into another mindset topic. But today, I am joined by someone who is just absolutely exceptional. Our paths have crossed over the years as investors, and that's been a lot of fun. The first time I met Barry was, I think, 2 or 3 years ago at a Michael Blanc event. And then we met each other again. And it's one of those things. This is why Conscious Investor, I always say, go to events. Go to events. And you start to see a pattern of who's consistent, who is showing up, who is investing in growing themselves, their business, their network, and such. Because I want to invest with people like that. I want to invest with people who are taking their investing seriously and that they're not just dabbling in their investing, but they're really looking to level up and align themselves with elite investors and on both the active and the passive side. Before I invite Barry on, I just want to give a couple of quick reminders. You know that the Conscious Investor Growth Day is coming up. It'll be here before we blink. It's going to be March 7th, 8th, 9th, and 10th. Now, that sounds like a lot, but the 7th is just make sure you get in, you have your tickets, you fly in to the Spokane airport, and we'll have a nice reception and, meet and greet time because trust me, I'm always flying out of the Spokane airport, and I know that it can be exhausting. And so just landing that day in advance so that you can wake up ready to learn all day Friday, bright and early, all day Saturday, bright and early, and then a half day on Sunday. It's going to be exceptional. The speakers that are flying out, these good friends of mine, willing to fly out. They're like, yes, I want to come and support the Conscious Investor Growth Day, Julie. Like, this is amazing. We love it. So come join. Remember, there are only 150 tickets available. There will not be more than that made available for sale. I could, but I'm not going to. And the reason is we really want you to connect on a really deep, meaningful level. So if you're interested in growing your health, your mindset, and your wealth as a conscious investor, this is where you want to be. You will find people that you are aligned with, and you will have an exceptional time, guaranteed. So there will be a link down in the show notes for you to click. You can, purchase your tickets now before they are sold out, because I'm confident that they are going to sell out. 150 tickets is not much. All right, let's go ahead and dive on in. Barry, so grateful to have you. Great to see you. Great to chat off air, and just amazing to have you here on the Conscious Investor podcast.
Yeah, hey, Julie. Great to see you again. Thanks for having me on. Appreciate it.
Yeah, I just, we had a lot of really great conversation off air. And what I love about that is, I know your backstory quite a bit. I do the sleuth work. We've met it multiple times. And then I go and do a little, cyber stalking on the website and read bios and everything. You gotta do that, right? Conscious Investor. But you have such an interesting story. I was wondering if you could just give the Conscious Investor just a brief intro into who are you? How did you get into syndication?
How far back we want to go and how deep you want to go.
Exactly. Well, you know what? Let's start with the syndication and how you got into real estate investing, because you love your W-2 job. And so tell us how all this works.
Yeah, so I still have my W-2 job. Kind of like how we were chatting offline, is a lot of people kind of place this benchmark on success in real estate investing is, have you been able to quit your day job? And absolutely, that's great if you can, or you have a job that you hate and you want to get away from. I'm fortunate enough. I'm an air traffic controller at Detroit Metro Airport, and it's a flexible enough schedule, and it gives me enough time to do real estate investing. And I say on the side, but it's really like my main driver in life. But anyway, so I started back in 2016. I bought my very first single family rental home. Like a lot of people, started by just buying homes, rehabbing them, going to the bank, refinancing them, and recycling that capital. And bought my first 18 homes in 17 months. So it just kind of
overachiever. Love it.
So when I started, my goal was, if I could just get 5 or 10 single family homes that would pair well with a nice government pension when I retire. And by the time I retire, I'll have those paid off. So everything will be great. And then I went and started shopping with the help of my now business partner and really good friend, Josh Sterling. And the light bulb went off for me. I just said, okay, this is how we really build something here. But anyway, so fast forward through that, it was a grind. It's exhausting just thinking about buying, rehabbing, and refinancing that many homes in that short a period of time. And he started to push me to say, hey, why don't you get into multifamily investing? That's your next step. You need to really start to scale this thing. And he had already been doing that. He had single family homes and graduated into multifamily and started his own property management company. And which is what helped me grow, is they manage all of our stuff. So I didn't get down in the weeds with rehab crews and all of that stuff. So I pushed back on him to say, hey, why don't you start chasing some bigger deals, get into the 80 units, 100 units plus. And we started to lean on each other. And he said, well, I don't think I have a network of people that I can go raise money from. And that's not my strength either. Him saying that. And so he looked at me and said, hey, you seem to know a lot of people that would like to potentially invest in real estate and invest with us, as they've watched us grow over the years. So he said, you do this, you start talking to everybody about potentially investing with us, and I will start chasing bigger, better deals and writing offers. So fast forward a few months later, he called me one day and said, hey, you know that Park Forest deal that we've been chasing? And I said, yeah. He goes, well, we got it. So I immediately skipped the excited phase and went straight to the panic phase of, oh my God, now we actually have to do this. Like, we've got to go raise some money. We've done hard money loans and a very small syndication before that with only $300,000 from a few investors. But now we had to go raise $2.8 million on our first syndication. And we were so naive. We just thought, oh yeah, we know a bunch of rich people and they got enough money and we're so awesome that they're all just going to write us a check for $500,000 and this will be done. Not the case at all. So we went out, we got that deal done, and it seemed that we were on a nice cadence for a while. It seemed like every 6 months we're doing another deal. So we have about $13 million that we've raised from investors over the years, and roughly 500 doors that we've syndicated. We still have all of those deals. I wish I could own every single one of those deals myself personally, but in any real estate investing, you're going to run out of cash and you're going to need to bring investors in if you want to keep growing.
I have so many questions. I love this. Thank you. And I had already written down some questions just from our conversation off air, but that really begs a question when you're saying, I wish I could own all of these just myself. I think that all the time. And then I think, wait, I don't mind holding this. If my investors just want to stay in this for the long haul, let's go, because let's just keep this cash flowing. Let's just work this over and enjoy the eggs from the golden goose, in a sense, right? Okay. So have you ever considered doing more of the quote infinite holds or the longer term holds? And what are your thoughts on that?
That's our strategy right there, where, yes, everything's for sale, but we don't really want to sell anything. Mm-hmm. We did have one deal that we exited. I was not part of the deal. It was my business partner's deal. It was the very first syndication he ever did. And somebody just came along, made an unsolicited offer that it was just...
Too good to be true, right?
Too good to be true. And you said, okay, take it off the table. But yes, so to answer your question, we want to keep everything as long as we we can, and it makes sense for really tax and depreciation purposes. There will be a day where it does make sense to sell and look at doing a 1031, some upgrade option. But we, in a perfect world, if we can identify an opportunity where we can buy this property, we can go in and add some efficiencies through property management and add the value, cleaning them up, increasing the rents, et cetera. Go in, do a refinance, and return, in a perfect world, all of the investor capital. And where it might differ from some people is we don't reshuffle the equity stack. So if an investor starts out with they own 5% or 10% of the deal, if we refinance and we give you 100% of your capital back, you still own that exact same share at the exact same percentage. And now we all have infinite returns. So you get your money back and you can redeploy it into another deal. And our long-term strategy with that is, whether we like it or not, you're going to have these refinance events. We can't control the market. So yeah, hopefully we have a much more favorable rate environment than we do now. But if we can return a bunch of capital or a significant piece of it, the investors, I assume, are going to be happy, and they're going to look back to us and say, hey, where's the next opportunity? And we've done this a couple of times now where we've done a refinance. We've returned a big, significant amount of capital. Yeah. And not only have they reinvested with us, they brought some more friends along too.
And there's a good reason why. Just a reminder, conscious investor, and this is not any type of financial advice, I will say, as I understand it, right? When we have a refi, it's not a capital event, quote unquote. And so you're receiving this substantial chunk of your investment back to you tax free. Again, trust and verify, okay? Because rules change and things like that. Whenever you listen to this, I don't know what the rules may be at that point. At this point, that's how that works. And so it's a huge, I mean, especially, depending on somebody's, what income taxable bracket they're in and such, having that money come in, if it was, coming in and they had to pay taxes on, that could be exorbitant for many of our investors. But when we look at, hey, I can get this back to you and you're not going to pay taxes on it.
Yeah, great point. Yeah, a refinance is a tax-free event.
It's so powerful. Okay, so now I'm curious. When you are presenting your investment opportunities to your investors, what is that timeline? How is it you're presenting it? Because let's be real, and conscious investor, I know you've seen investment opportunities before. If you haven't, shoot me an email and I'll just send it to 3keysinvestments.com and I'll send some samples your way just so you can lay eyes. But generally speaking, in someone's investment summary, they will have, the timeline. It used to be, remember, 1 to 3 years. and then people like 3 to 5 years. And now you see 3 to 7, 5 to 7. It's so funny watching it change, right? As if we have a crystal ball. But what does that look like? How do you present that to your limited partners?
So when we do our underwriting and present the opportunity to the investors, we're always showing an 8 or 10 year hold. And we're targeting a refinance event within 3 to 5 years. Mm-hmm. And some of them, we do project a 100% return of capital at the refinance event. Some we project a 50% return of capital at the refinance event. So we don't try to oversell what we're doing as far as the whole period of time. And this is just me personally, I don't like the every 3 years we're gonna project a sale. You're essentially a house flipper. You're constantly on the hunt. And for people that have deployed that strategy, I'm sure it worked great for them in the short term where they've had some very big windfalls, especially through COVID. But now your biggest problem is, great, you got your capital back. Where do you put it?
Yes.
Because now you're getting beat up by inflation, where we're still invested in the deal and our equity is trapped in a way, but it's still growing and it's fighting inflation.
And it's kicking off. It's spitting off returns. Those distributions are still coming. You and I are aligned in philosophy. I generally have guests that I know have some undercurrent that is very similar, but I'm excited to just learn more about, your investment thesis, because we've talked at different levels, but this is I'm like, yes, exactly. And it really attracts a different type of investor, I have found,
it does.
To an investment. So what kind of investors, do you have a qualification process, or, if somebody reaches out to you from this podcast, say, I mean, what kind of investors do you invite into into your investment world? I say, and I'm going to just put an asterisk here.
Yeah.
I do have conversations, and in those investor discovery calls, I always say it's a two-way street. We're learning about each other. We're making sure that we're both in the right place and that this is going to work well for both of us. So what works really well? What kind of investor works really well for your company?
We have all kinds of investors, and we welcome all kinds of investors. I would say the best investor for these type of investments is somebody that is thinking long-term. If somebody is looking at these and saying, great, I'm going to invest in a few deals and I'm just going to retire right now and live off my cash flow, probably not the best investor for us. And if they want their money in and out really quick, probably not the best fit. But for somebody that says, hey, I really like your guys' long-term strategy and I want to continue to invest in multiple deals over time, knowing that I'm going to get cash flow from all these deals, but also have these big windfalls where we do refinances and that money comes back to us, that's somebody that we're more interested in partnering with, somebody that's thinking more long-term. And generally those people are, I don't always want to say C-suite, but say you're in the medical field, you're an attorney, whatever your craft is, you do it very well and you make a lot of money doing that. But you like real estate, you want to be invested in real estate, but it can be another full-time job. So the best way to do that, find a good operator, somebody that you trust and has a track record, and deploy your money with them. Let them do all the hard work.
I agree with that. Letting them do all the hard work, and to circle back on that, let them do the hard work. What I like about your investment strategy and holding things for a longer period of time is that it takes work to find a deal. For a passive investor to go and source out a team that they know, like, trust, that has a track record, that has an aligned philosophy and all of that, and then to have to recycle and do that every 3 years, it's exhausting. But
you bring up a good point there, because a lot of the opportunities that we'll bring to our investors, they're investment opportunities that they would not be even able to invest in if they tried to go buy them themselves. They could potentially go and find a key sponsor and put a team together. But like, if I wanted to go buy a car dealership today, I can't buy a car dealership because I don't have experience in the car dealership world.
Yes.
If I want to go buy a large 100-unit apartment building, I'm not going to be able to get financing on it. And I'm just flat out not going to have an opportunity to even look at that deal, because the broker already knows who his tier 1, 2, and 3 buyers are, and they're taking that opportunity to them.
Yep, exactly. Yeah, I didn't even think of it in that context, and I appreciate that addition into it. When we're talking about returns, and again, conscious investor, we're going to talk in generalizations here. We're not allowed to just go and say, these are the returns. They're projections, right? Yeah. These are concepts. These are metrics that we aim for, shoot for. And we were talking off air about, how you guys are taking some of the capital, the cash flow, and reinvesting it really back into the property, right? On at least one of your assets. I won't say that across your portfolio, but, can you just let's talk about, what do the returns look like? How are you supporting your investors by utilizing the capital, that's the working capital that's coming and going as such?
Yeah, so so there's 7 different syndications that we have, and everyone's a little bit different, where we have stuff that's not a class A, but it's closer to, where it doesn't really require a bunch of CapEx and a bunch of heavy lifting. It's kind of boring. It sits over there and does its thing. And then we have the complete opposite end of the spectrum, where it's just ugly. We can't even put lipstick on this thing.
Right.
And even though we might have raised a bunch of money up front to go in and do all of that heavy lift CapEx stuff, it still requires more cash. And we're constantly looking at, what's the best way to spend this money? What would I do if this was just my property and my property alone? Nobody else is involved in this. And we always come back to, the right answer is, the smart thing to do is to reinvest the capital back into the property when needed. So if we turn over a unit, and we try to not spend the money if we don't have to, but if we go in and we turn over a unit, I'll walk them personally myself and we look at it and we say, this thing's just at the end of its life. We have to do a full gut rehab of it. So typically we find that that's a $15,000 to $16,000 expense. By the time we go put LVP floor in, new kitchen, new cabinets, new everything, appliances, bathrooms. But we're only going to do that if we can go in and we can get the rent growth that we know we can, which is typically at least a $200 or $300, in some cases more, rent bump. And what that equates to is if we break that math down, you take the rent increase of, say, $300 a month times 12 months, divide that by roughly a 6 cap or a 6.5 cap. That generally works out to a value add number of $50,000 to $60,000. So when you break it down that way and talk to your investors and say, hey, you guys, you know what? We did have cash to distribute this month, but we're going to take that money and we're going to do 3 or 4 rehabs with it. But here's what we're getting in return. We're getting, each one we do, we're getting a $60,000 value add for each $15,000 that we reinvest back into the property. Does that sound like a good idea? It's typically a good idea. And the other thing with that is we also remind investors when that topic does come up is that, hey, we're also not taking a distribution as the GPs of this team at the same time. So we're not just making that decision with your money or our money, it's everybody's money. We're also not taking a cash distribution because we think this is the best way to deploy the capital. And it will far exceed the return down the road of the shortfall on the cash in the short term.
So I imagine that because you already know what kind of investor, right? You have an investor profile, if you will, and you have your investment, strategy of we're going to hold this for a longer period of time. Our investors are thinking long-term. Mm-hmm. So I imagine that doesn't come up as an issue. It might be a question, but as soon as it's laid out, it's like, oh yeah, that's already in line with everybody's thinking. Yeah.
Yeah. It typically doesn't come up, and It does every now and then. People are like, oh, I really want my cash flow. And I'm like, well, I really want more cash flow too, but I really want a much bigger check down the line.
Yeah. Yeah. Delayed gratification is a beautiful thing.
That's why, again, like when you come back to your perfect investor profiles, who has a longer term strategy here?
It's so important.
And time fixes most things with real estate anyway. So if you can hold on, the longer you can hold on to it, the more it will fix some mistakes that you just didn't even know you were making at the time. And I always think it gives you have more control and more power the longer you can hold on to your real estate.
I would add to that a little asterisk to say, if you're being responsible and forward thinking as you and Josh are, right? So you and we love to go and buy. I mean, if we want to have some fun and force some appreciation, let's go. Mm-hmm. Let's go buy that place that the owner didn't have that foresight, neglected the units, didn't reinvest any of the capital. Those are the people that, people like you and I buy from. It's like, oh, okay, well, we'll buy this off you. We'll make the money off of your lack of discipline to put this back in.
Exactly. So to kind of come back full circle here is, where do we find our opportunity? We find our opportunity in the property where people took all the cash out of it. They didn't put the cash back into it. So now we buy it and we put the cash back into it to reinvest and really grow the value of that building.
That's so rad. So rad. Have you guys, and I think this is a redundant question based, from our conversation, but I wrote it down because before we started when we're off air, how has your investment thesis evolved over time? Or has it, would be a better question. Has your investment strategy evolved as you and Josh have worked together and, grown out your portfolio? Has it, your approach during the pandemic? That'd be interesting. Remember how during the pandemic, everybody's like freaking out and debating good time, bad time, all of that. And now we're looking back and saying hindsight's great. So then another question, so I know I'm bundling questions together here, but they're complementary, would be, what do you think we'll look back on? And this is pure speculation, conscious investor. It's just for fun, right? We have no crystal ball, but sometimes our experience can help us, interpret things in a certain way. So let me go back to my bucket of questions that I just dumped on you. I apologize, Barry.
I think I got them.
You got them? Okay, let's go. Let's see if Barry's got them, right? Conscious investor.
Start with the kind of the thesis and the strategy. Like, what's our overall long-term strategy? Because we get the question from a lot of people is, what's your goal? And whether that be how many doors do you want to get to, how much like assets, et cetera. And we don't have any line in the sand or a ceiling that says, oh, once we hit 1,000 or 2,000 or 10,000 doors, we're done. It has always been, we just want to continue to be able to consistently do good deals.
Yes.
And by good deals, I mean, we let a lot of stuff go by, especially leading up to COVID and during COVID. I mean, nobody could have predicted that rents and everything was going to happen like it did during COVID and rates were going to bottom out. But anything we've ever underwritten, it has to pencil out and project the returns with the current actuals or very close to it, where we don't typically like to buy stuff saying, if we get the rents to $400, then it cash flows, then we can do this. That's
no blue sky buying ever.
No. So we've always, every deal we've ever bought has always been, okay, today, if we see zero rent growth and rates, everything just stays the same, this thing works. It operates. It spits off cash. It pays for itself, all these things. I think that answers the question, the first one, right?
Yeah, that does answer the question, and you did it eloquently.
So that still hasn't changed for us, and that's kind of why we let so many deals go by during COVID. And it's funny you bring that up, because at the beginning of COVID, we had a 66 unit property under contract, and then we got under contract, and then boom, COVID hit. And I remember the day we got out of the car to do due diligence, me and Josh just looked at each other and we were both like, this is when the sky is falling. People are hoarding toilet paper. Here in Michigan, like you couldn't go on a boat if it had a motor on it. We had so many crazy rules. We said, should we even be buying anything right now?
Right.
And we put that deal on hold. We went to the seller and we just said, hey, can we do a 30-day extension just because the world's upside down right now?
Right.
And because we're immediately thinking like, oh my God, people aren't paying rent now. Like, what's going to happen with all of this? So we let a month go by. We saw everything start to settle as much as it settled in those times. And we went through, we got the deal done, and we got to thinking, we're like, this is kind of an ugly project. It requires a lot of work and it's not really going to be that great of a deal. Thank God we did it, because it ended up being one of the best deals we've done so far. This was kind of a unique one where 66 units, very, very ugly. It was the one I mentioned previously. Like, we couldn't even put lipstick on this pig.
I love how you continually emphasize how ugly this place is, because I am this is a little ugly duckling,
There's not a single unit that turns over in there that we can just move someone into. Every unit has to be a full gut rehab. And things we could have done better is we didn't project that, hey, we really need a lot more money than we thought to do all this rehab, but we did a lot of heavy lift on it. We refinanced the thing way ahead of schedule. We were thinking 3 years out. We'd do a refinance and return all the capital. We got it done in 14 months. Mm-hmm. And where we look at it now, go, it's great. So we did. We returned 100% of the investor capital in 14 months, but we haven't really done much cash distributions on that thing in the last couple of years, because every dollar it spends off is going back into rehabs. Like right now, we just kicked off common area renovations. We were looking at like, what's the last big thing that's holding people back from liking this property? And our common areas are garbage. We just got to do them. So as much as I would love to take that cash and go to Disney World with it, it's no. Let's do the common areas. Let's continue to rehab the units as they come up. And we had another great deal that we bought during COVID, but it was a battle. We almost walked away from it. And another one that we look at, we say, thank God we did that. Thank God we bought it. And just, there's never one deal that we've bought that we looked at the time and said, wow, this is a grand slam. This is just going to be a great deal. We've always looked at them and we're like, these are all singles and doubles.
Yeah.
And hold on to them and let time take care of us, and be a good operator and keep on moving.
That's so critical right there. Like operating it well.
Operation is key. Everybody always talks about how to find the deal and how to raise the money for the deal and how to close the deal. I don't think there's ever enough emphasis on how do we operate these deals and operate them well. Like really have your operation under control, tight data, being able to make a decision and go with it.
This is why, Barry, I invited you to the podcast. The last time we saw each other in June at to Dealmaker Live, we had a conversation where it just clicked. I'm like, oh, we have a lot of alignments that I did not know about. And even in this conversation, it's so apparent, so obvious. It's like some of that philosophy of people, like you're not successful unless you have quit your W-2 job. I like my W-2 job. I mean, I have left mine, but what I tell people is, and I don't try to dissuade active investors who are trying to get in, but I've told people, I'm like, are you looking for another job? And can you be the boss of yourself? Because if you want to be successful as a real estate investor, this is a job. It is a profession, and it is something that takes your attention. And so,
that's the only thing passive about investing in real estate is if you are a true passive investor. If I'm a heart surgeon and I make millions of dollars and I just write my operators passive checks to invest in their deals, that's how you're a passive investor, and you create just passive income. Otherwise, if you want to quit your job and just go invest in real estate, you have another job. You just left that job for this job. And yeah, it's great. Now you're your own boss, but it comes with a lot of sleepless nights.
Or not sleepless nights, but you're your own boss. And if you don't know how to do that, it's a hard knock life. It's just, it's so funny. And the concept of, I am definitely into longer holds. I'm full agreement with you on that we don't need to be flipping apartment complexes and hustling. And those of us who had that philosophy of having a longer, comfortable hold that it was stabilized and would support itself, we're reaping the reward of that now because the deals aren't prevalent. They're not, they're just falling from the sky. And finally, thinking about that whole blue sky drove me crazy. My experience in growing up in the real estate space. I'm first gen with commercial real estate investing, but not new to real estate. And it's like, don't bank on blue skies. You don't have a crystal ball. You don't know what's coming. Does it work right now? And does it work if you scrap a bunch of stuff that makes it look good even now? How messy can we make this deal look and it still looks good?
With a lot of the reinvestment, and I call it kind of work on the ground floor that we're doing now with some of these properties, and I'm doing with my own properties as well, is the world will shift again. The market will shift. Rates are not going to stay this high forever. Will they ever go back down to 3? Probably not. I don't know. They might. But when they come back down into a more normalized range, we've already done the work. We have already reinvested in the property. We've increased the rents. We've stabilized this thing. Now is the time to pull the trigger and we do the refinance. And at that time, I think, is when a lot of opportunity will start to hit the market again. And we're going to be in a great position to have these refinance events happen, pull capital out, give it back to the investors. Their money will start flowing again and opportunities will come. But if you're just holding on by a string right now and not being able to reinvest into your properties and really take care of them, when the time comes, that's when the bank's going to look at it and go, your numbers really don't work out. Because one thing everybody missed, ourselves included, leading up to COVID and during COVID, was what the expenses were going to do. So if you didn't get into any type of fixed debt and you didn't get the rent growth that you were projecting with your blue sky mentality, everybody is seeing higher expenses than they projected. Even if you were a conservative underwriter, like everybody calls themselves, your expenses are higher than what you thought they were going to be.
Air quotes on conservative underwriter, big time.
Everyone's a conservative underwriter.
Oh my gosh, it's just the talking point that so many people have. It's so ridiculous. Please, you're making the rest of us who actually do underwrite conservatively look bad. Go away. Stop using that term. Barry, let's come up with our own term and we'll coin it so that people can know. It'll be like on social media platforms where it's like, certified. This is a real person or whatever.
What do we call it? Trademark it?
Trademark it, or I know now it's like they do something on your social profiles. I don't run my social stuff very much, but they'll like this is who you are. This is the real person. Like, okay, verified.
Yep.
Not really sure.
Yeah, there you go. Verified.
I'm going to ask you a question I've never, ever asked out of over 420 whatever episodes. I've never asked this question.
Oh, God.
Are you ready for it?
No.
I know. I'm such a, so scary, so menacing. No, I'm curious what other podcasts you enjoy that you grow from and learn from. What kind of content you like to consume? Because you're not an idle person, you're a high performer. And so I bounce back and forth. I don't have one go-to. One interesting one, and this is an audio book right now that I'm reading. It's just more of like a personal development thing that helps me with just communicating with others, is learning about the Enneagram. Oh, totally.
The nine different personality traits and strengths and weaknesses and all those things. And I find it fascinating because it just helps you understand yourself better and helps you understand just how others are and how they operate and what makes them tick.
So good. I have 5 personality patterns over on my shelf is in the lineup. Speaking of, this is another one, Crucial Conversations. Happens to be a favorite. So I appreciate that I was going to ask you if you had a book that you were consuming as well, but I bounce around in podcasts as well. And I'm not afraid to ever say, because it shifts, because our needs shift. And so I'll listen to one and then it leads to others. But Founders podcast, David Cerna's. I've been so intrigued and obsessed over the last several months with this podcast, just going through the different founders. Particularly, one of my favorites happens to be the founder of Southwest Airlines.
Okay.
Sam Kelleher. It'll make you laugh. I was working out in the gym listening to this, lifting weights, and my husband's across the room and I'm laughing and he looks at me and I'm like, I couldn't help. It was like, that guy is such a character. So anyway, that's one of my podcasts that I've been binging on recently. That'll
be my next go-to once I'm done with this book. And that's kind of how I come up with a lot of the stuff that I get into, is somebody recommends something. You got it. And same with shows. You got to watch this. You got to listen to this. You got to read that.
Yeah, and this is why I asked that question to you. So I like to find it from people that I have an alignment with. It's like, okay, they're people that I could grow and learn from. Let me see what they're listening and reading. For sure.
Yeah, after a while, I always stay up to date on the market and what everything's doing and how to grow your business, et cetera, in real estate. But after a while, I'm so tired of listening to this stuff. I need to shift here.
Totally. I love it. Okay. Conscious investor, you're listening. You're like, Barry, you're super awesome. How are they going to get in touch with you so they can learn more about what you and Josh, deals that you have available?
Yeah. Easiest way to get a hold of me is just email barry@newmissioncapital.com. barry@newmissioncapital.com.
Awesome. Conscious investor, make sure you reach out. If you feel in alignment, as I always say, there's a reason why I have guests on the show that I believe are in alignment with your goals, right? And so if you're feeling, hey, there might be an alignment, this isn't one of those, sit on the sidelines. Don't wait. Reach out, because you don't want to opt out of a potential deal that's coming up on the table. Right. So we want to make sure we start those conversations early, because the relationship with good investment teams is really important. And you want to have that relationship started so that you feel that you can trust them. And so they can feel they can trust you as well. Two-way street on the trust issue. All right. Barry, thank you so much. What a great conversation. I know we've served the conscious investor really well, and I appreciate you.
Yeah. Thanks so much. Appreciate it.
Conscious investor, don't be a stranger. Just like I said about Barry, hey, if you want to know what deals we have, remember, we operate in a way under a 506B umbrella. So we don't go and advertise our deals over on social media platforms. It's intentional. We don't want strangers in our deals. We don't want just anybody in our deals. We want to know who our investors are so that we can be certain that our investment thesis and your investment thesis are aligned and that we really are serving your investment goals. Okay. So don't be a stranger. Jump on down to the show notes and schedule a time for you and I to talk. And I often say this, if you're concerned, oh, Julie's too busy, oh, this, that, get out of the headspace, go look at the reviews and look at other people who have had conversations. And I think that you'll be encouraged by, it's a great conversation. It's fun. It's not a scary conversation. It's just us getting to know each other and me understanding what your investment goals are. And some people have called in. We've been on that call. And I've actually pointed them in another direction and sent them to a friend who would be better aligned with what they're trying to accomplish. So this isn't just about, oh, I want all the investors. It's no, I have an amazing network of people. And if your goals aren't aligned with the direction our company is headed and how we invest, I probably know someone who is trustworthy and reliable that I can, make a connection with. So head on down, schedule a call. Let's get to know each other. And until next time, Conscious Investor, live big, love bigger, and do great things.